everyone. Welcome to the Frugal Rolls YouTube channel. I'm Nicole.
And I'm John.
And we're glad you're here. Today we're talking about investing in stocks for beginners, which is something scary to so many people that they allow their fear to hold them back. We talk with readers every day who tell us they can't invest. They say they can't afford it, or that they don't know how, or that they're just not the right kind of person. But anyone can invest in stocks.
That's right, Nicole. You don't have to be rich and you don't have to be an expert. You just have to be disciplined and willing to learn. I personally used to be a stockbroker and have an MBA in finance, but I taught myself how to invest in stocks. Today we're going to tell you everything we wish we knew about how to invest in stocks years ago so that you can start using this powerful financial tool to grow your wealth and achieve financial independence.
Investing is a big, broad topic, and if we were to try to tell you everything there is to know, you would be overwhelmed, and this video would be 18 hours long, at least, and we're not going to do that. Instead, we're going to divide the video into parts, which we've time-stamped below. So if you want to jump to a particular section and just learn about that, you can. Now, grab a pen and a paper or open a Word doc on your computer or whatever you need to do, but get ready to take notes. We want you to take your time. Pause as you need to really absorb what we're sharing. We'll go slow and we'll give you everything you need to know about how to invest in the stock market.
You know, if you're like me, having a roadmap up front where we're going will help you understand and follow along easier. So here's our outline. We're going to start with our passion about the topic, share a true horror story, tell you when you should start investing, and talk about how to handle your emotions when investing.
Then we'll dive into the details. What is a stock, a mutual fund, an index fund, and an ETF? We'll cover 4 main types of accounts: individual, joint, IRAs, and custodial accounts. We'll talk about where to gather information about stocks and how to buy them. And then we'll wrap up with how much money you need to start investing.
All right, now it's time to get started. I absolutely love talking about how to invest in the stock market. And it's not because I know everything, but because I used to know nothing. I used to be just like you, scouring the internet for information about investing for beginners. You see, my parents never taught me about investing growing up. I never saw them invest. I never learned how to do it myself. By the time I graduated from college, I had racked up nearly $50,000 worth of debt, and investing was the absolute farthest thing from my mind. I don't think I would ever be able to invest in the stock market. Fast forward a few years, and I found myself out of debt and in grad school. I wanted to advance my career and had always been interested in finance. So I got my MBA and went to work for an investment firm as a stockbroker. It was while taking online classes at night where I began to see that I could learn how to invest in the stock market. I started with my textbooks and then moved on to other good investing books for beginners, which helped me understand what the stock market is and how to invest in it. I opened up a brokerage account and started investing with just $500. Fast forward to today, and we've seen that amount increase significantly. It hasn't happened overnight, and it hasn't always been easy, especially as the stock market swings up and down. But we've committed to investing for the long term and have seen our money grow tenfold.
You know, I remember the stories you shared many nights of people you spoke with on the phone about their finances. Some of them taught themselves how to invest, and they were able to make strong gains in the market, while others made huge mistakes that cost them a ton of money because they didn't know what they were doing.
Yeah, you know, Nicole, the recent story in the news about a young man from our home state of Nebraska who got involved in options trading through a popular investing app really shook me. It was so sad. I spoke with so many people like him back in my stockbroker days. It's so easy to get in over your head, become overwhelmed, and make poor decisions because you don't understand what you're looking at in your brokerage account or on the app's platform. He thought he had racked up nearly $1 million of debt and very sadly took his own life because of it. I just want to tell you right now, as you start investing, stick to the basics and always call, chat, or email your brokerage or investing app with any questions or concerns you have. Don't assume that you have the answers. Sometimes a dashboard or the way a platform looks can be confusing and make you think that you've lost a lot of money when you really haven't. I saw this all the time when I worked as a stockbroker and fielded many calls from concerned investors who thought the dashboard was telling them they had lost a ton of money when in fact they really hadn't. Trust me, picking up the phone and getting your questions answered is the absolute best thing you can do, and it will go a long way in easing your fears.
Speaking of fear, it's easy to be afraid that you will lose all your money when you see the stock market swing up and down like it has been recently. What would you tell people who were worried or wanted to pull their money out of the market back in 2007 and 2008?
Well, Nicole, ultimately, it's their money, so they can do whatever they want with it. But I encourage people then, and I encourage you now, to follow what our neighbor here in Omaha, Warren Buffett, who is one of the most successful investors of all time, says. Buy what you know and invest for the long haul. The market always comes back. Over time, there's no other tool out there that can help you grow your money as well as the market. I'd also tell you not to look at your account balance every day, especially on days where you know the market is going down, unless you can do so without getting scared about what you are seeing. Set up a practice of looking at your investment accounts monthly or quarterly. Doing so helps you remove emotions and also lets you see how your portfolio is performing. Overall, you want to revisit your investing strategy semi-annually or annually, but always with a level head. If you're feeling frightened, wait until you're composed and calm to make investing decisions.
So what you're saying is make investment decisions based on logic, not emotion?
That's exactly what I'm saying. Don't let fear make you pull your money out of the market or avoid investing. In fact, you want to start investing as early as possible. Compound interest is so powerful. In fact, Albert Einstein calls it the eighth wonder of the world. If you've not heard of it before, it's how your money grows over time. Let's say that you put $1,000 into your investment account and your investment grows. Over time, that investment continues to grow and reinvest, and your account grows in kind. Think of compound interest as your interest earning interest. In short, your money is working for you to earn more money. The earlier you start investing, the longer your money has to benefit from compound interest, and the closer you get to financial freedom.
Another benefit of starting early is that you can make mistakes sooner, and then you can learn from those mistakes and you can apply that knowledge to future investing decisions. You're going to make mistakes. You're going to lose money, but that's okay because you will learn and you will grow, and so will your money. Now, the first thing that you need to start investing is a good money mindset, and that starts with the conviction that you must pay yourself first. Now, what do I mean by that? Simply that before you pay a single bill or buy groceries, you pay yourself. Set money aside that you can use to invest or save for your financial goals. Try to start with $25 a month. And as you start investing, use that money and think of it as paying your future self. If you don't have $25 a month to invest, maybe it's time to start look at your spending. Are you spending more than you earn? Make a simple budget and look for expenses that you can cut or ways that you can earn more money that you can then use to create an emergency fund and invest. Now, links to posts that we've written about all those topics are below. So if you need to, press pause, go bookmark a few of them for future reading.
Okay, we've covered the basics of investing at a high level and given you some good, sound principles to follow as you begin investing. Now it's time to dive into the details. Let's start with a question people ask me all the time. What is a stock? A stock is a piece of a company you own. I was just helping our children understand this the other day. We're teaching them how to invest in stocks by opening brokerage accounts for them and letting them buy 10 shares of the company they know and love, Disney. Disney consistently trades around $100 or so, and they'll need around $1,000 to buy those 10 shares. Over time, that stock value should hopefully grow and their shares will become worth more.
I grew up in Southern California, and I know people who bought Disney stock when it first began to be publicly traded. They're multimillionaires today. And when I was a kid, I followed the price of Disney stock in the newspaper, but now I do it online. I love Disney, and I love the fact that I own a little slice of it.
Yes, you are a Disney nerd. In fact, my entire family is. And I suppose investing in them only makes it worse, but oh well. Let's move on to another investment question I'm asked often. What is a mutual fund? When you own a stock, you own one slice or share of that company. But that's not the only way to invest. You can invest in a mutual fund, which is called a basket of stocks. Let's say you don't want to put all of your money in one company. What if that company has problems and its price starts to plummet? You could end up losing a lot of money. So what some people like to do, like me, is to invest in funds. Mutual funds are one type. ETFs, or exchange-traded funds, are another. And index funds are the final type of fund. Mutual funds and ETFs are baskets of stocks. Let's take an example like VTI. It's an exchange-traded index fund, or ETF at Vanguard. They're a practical, cost-effective way to build a diversified portfolio of stocks, bonds, or short-term investments. Mutual funds and ETFs are managed by professional money managers who select the stocks that go into the funds.
When you buy one share of a mutual fund, you own a tiny slice of that basket of stocks. As the value of the mutual fund or ETF rises, so do the value of your shares. As long as you watch for fees and invest in funds that have low fees and good asset allocation, they can be an excellent way to invest in the stock market with little money and less risk than just putting all of your money into one or two companies. An index fund is similar to mutual funds and ETFs, but it's like a basket of stocks that mirrors a specific index, like the S&P 500 or the Dow Jones Industrial Index. An example will be the one John mentioned earlier, the VTI fund. That mirrors the entire stock market.
I'm personally a lazy investor. I don't have time to pick individual company stocks, so I invest in low-fee index funds through Vanguard. Schwab and Fidelity are other good options too. It's easy to track my returns because as the value of the overall stock market grows, so does the value of my shares of the index funds we're invested in.
Now let's move on to discuss different types of investment accounts. There are 4 main types of investment accounts: individual, joint, custodial, and IRAs. Now that we're talking account types, we're getting closer to explaining how you actually buy stocks. When you open an account at a brokerage or begin to use an investment app, you will be asked what kind of account you want to create. If you are just opening an investment account for yourself, choose individual. If you are opening an account for yourself and your spouse, which means you will both have access to the money in it, open a joint account. A custodial account is for a minor child. These are the types of accounts we open for our children and are using them to help them learn how to invest in stocks. Until they become adults, we will have control of those accounts and the money in them. When they are adults, they become individual accounts that they have access to. Now, the last type of account is an IRA, or individual retirement account. You might have heard of this before. It gives you special tax benefits on the money that you're saving for retirement.
There's a lot more that we could say about IRAs and investing for retirement, but we'll tackle that separately in a different video in the future. For now, let's move on to where to find information about the companies or funds you want to invest in. Lack of knowledge keeps more people from investing than anything else. There are lots of ways to easily get information on stocks and mutual funds today. Most online brokerages, including the ones that we're going to mention here, have lots of great free information about the funds and stocks that you can invest in through their platform. The investment apps also work the same way. There are lots of helpful articles on our site that show you where to find information about investing that we link to below. One of my favorites is our Best Investing Books for Beginners post, which has some really great, easy to read books that will help you improve your investing knowledge.
As you increase your knowledge, you'll feel more and more confident about your investing decisions and how to buy stocks, which is actually the next topic we want to address. The first step in learning how to buy stocks is to open an investment account at an online broker like some of the ones we already mentioned, Fidelity, Charles Schwab, or Vanguard, which is where we choose to invest. Or you can create an account through a robo-advisor like Betterment or M1 Finance. Or you can use an investment app like Robinhood or Stash. You can buy shares of the companies you love, and you can track their growth over time through any of those platforms. However, if you're truly new to investing and you don't know where to start, you can still invest through a robo-advisor like Betterment or M1 Finance. Those may be your best option. Both platforms will help you manage your investing for you based on your goals. You only need $100 to start investing with M1 Finance, and Betterment has no minimum balance requirement. We link to all of these below, and we have done reviews on many of them, so check those out to find the one that you like best. And once you settle on one, open an account and put money in it. Look around the site, pick a stock or a fund that you want to invest in, and buy it. It's pretty straightforward, and it leads us to our last point. How much money do you need to start investing? The answer is not much.
We talk to readers all the time who think that you need to be rich to start investing. You don't. You can open an account at traditional online brokers with very little money. While there are some funds that require a minimum investment amount, Schwab and Vanguard don't require a minimum balance, so you can start with literally nothing. Vanguard lets you start with just $10, and investing apps like Robinhood, Stash, and Acorns all let you open an account with $5 or less. Do you have $25 sitting around? Open a brokerage account and find a company you know and like that trades shares for less than that, and buy some. Get a feel for the process and start tracking your growth. It's okay if you lose some money. Just keep learning and keep investing. Remember that investing is something that you do for the long haul. You know, my wife is a runner, so to borrow from her world, investing is a marathon, not a sprint.
That's right. And the finish line is the financial freedom you want. Don't let fear or lack of knowledge stop you. You've made it this far in the video. You have all the information you need to take action today. Check out our links below and explore more. If you don't have any money to invest right now, watch our video on how to save on little income. Start with $25 a month and invest that money. We know you can do it. If you have questions about investing, leave them in the comments below and we'll respond.
Thanks for watching, and remember to hit that red subscribe button for more content, and we'll see you in our next video.